While everyone watches public exchanges, a hidden buying spree might be happening behind the scenes that could dramatically affect XRP's price. According to analyst Chad Steingraber, OTC market makers are quietly accumulating XRP to avoid creating massive price gaps for the new spot ETF. This theory emerged from closely watching the trading activity of the Canary Capital XRP ETF, known by its ticker XRPC. Since its impressive debut on November 13th with $245 million in inflows, this first U.S. spot XRP ETF has shown unusual volume spikes that don't always correlate with public price action. But here's the puzzle that Steingraber noticed. He observed sudden buying spikes, like one morning where 84,103 XRPC shares traded worth $2.056 million in the first 30 minutes. He projected the fund could see up to 1.9 million shares in total volume that day, which might require acquiring around 11 million XRP to back those shares. Therefore, Steingraber proposed an intriguing explanation. He suggested that over-the-counter market makers are rapidly purchasing XRP privately to fulfill potential ETF acquisition needs. His reasoning was simple. These market makers don't want a significant price difference between the XRP price at purchase and the price of their shares. If they delay buying, the price could move against them. This creates a fascinating dynamic. While retail traders watch public charts, institutions might be conducting massive OTC deals that don't immediately impact the visible price. This could explain why the XRPC ETF continues to see impressive stats, recording $25.4 million in inflows on November 17th, according to Sosa Value data, even while the broader market remains bearish. But there's a crucial caveat to this theory. Steingraber himself admitted uncertainty about his observations. The volume spikes represent total trading volume, not just buy orders. There's no guarantee these spikes came exclusively from accumulation rather than mixed buying and selling activity. Therefore, we're left with a compelling possibility rather than a confirmed fact. The idea of stealth OTC accumulation aligns with how institutions typically operate. They avoid moving public markets when making large purchases. If Steingraber's theory is correct, we might be seeing the quiet buildup before a more significant price move, as OTC desks secure XRP inventory ahead of expected ETF demand. The key insight is that ETF launches create complex behind-the-scenes mechanics that can precede visible price action. For XRP holders, this means watching OTC activity might be as important as watching public exchange charts.